Hey everyone, welcome back to the channel where we break down stocks like they are your next big move. If you're wondering if Apple is a buy right now, stick around because we have got the real scoop on its strength, bumps in the road, and what numbers say. By the end, you will know if it's time to hit the buy button or sit tight. Let's jump in. Apple, the company with iPhone in your pocket. But what does Apple really do? They design, sell things like iPhone, Mac, computers, iPads, Apple Watches, AirPods, Apple TV. Apple also makes software that runs all these devices like iOS, macOS, and services like App Store, Apple Music, and iCloud. The big picture is this. Apple makes the gadget that people love, keeps them coming back with the services that make life easier. That's why they are one of the world's biggest companies, worth about $3.8 trillion as of this October. The price was around $255 per share in late September, and they just had a strong third quarter with their next big update coming in October. So what's under the hood? Apple sells a lot, about $400 billion in last year, with $97 billion in net profit. Their margins are way above most companies in the industries. For every dollar they sell, nearly half is gross profit, which is really good compared to the similar tech companies. They're also efficient. Only about a quarter of their revenue is eaten by the expenses, which means more money is left as profit. But to put in simple terms, Apple still makes most of its money from iPhone. So if iPhone sales go down, it could be a problem. Now the big picture. Apple got a stock score of 78 out of 100. Why so high? Rock solid finances, top spot in market, and room to grow with fresh ideas and more services. But hey, it's not perfect. High price tag, risk like supply hiccups, and earning jitter knock it down a bit. The company keeps people buying new stuff because their product and services are tied together. So if you buy an iPhone, you might get an AirPods, maybe a watch, and you're hooked into the ecosystem. That's a big strength. But it can also be a risk if people stop buying iPhone. What makes Apple a winner? First off, fans love it. That ecosystem keeps you hooked across devices and services. But hold, stock's down from its 52-week high, showing some doubt. Tries to earning at 29, feels a bit steep compared to old days. Supply chains could snag, seasonal slumps might hit soon. Volatility is okay, but fear in the mix, and dividend just 0.49. Not great if you want steady payouts. The company is also facing more competition, especially as other companies copy Apple's idea and make a cheaper product of it. And if something goes wrong with an iPhone, it's still one of the main moneymaker, the whole company shakes. It's a balanced beast. Huge wins, but watch those pitfalls. Makes you think, doesn't it? Next, what the pros on Wall Street are saying. Over the experts, 48 analysts weighing in, they call in buy. Price target, average is $246, high is $310, and low is of $175, with a median of $244, with a median of $245. Earning per share is around 7.39. Out of 48 analysts, 24 says strong buy, 5 says buy, 15 says hold, and 3 says underperform. Just one sell. Volatility below average, which is chill. Most folks sees growth ahead, but numbers don't lie. Let's check some deeper metrics about the stock and see if it's worth the hype. The PE ratio, that's price to earning or how much you're paying for each dollar of profit, sits as 35.46. Compare that to peer at 31.87 or the industry average of 32.36. EPS, earning per share, the profit slice of the company, dropped a touch from 1.65 last quarter to 1.57, but it's up from 1.40 a year ago. So yearly growth is still there. Think of it like a slight dip in your paycheck, but you are earning more than last year. Apple's growth scores 3 out of 6, decent, not stellar. Performance, a weak 1 out of 6, showing some stumbles. Health is 2 out of 6, meaning it's a solid but good shape up. Apple's got that shiny, expensive vibe, but you're wondering if it's justified, aren't you? Let's see how it compares with the competition out there. Industry comparison. First up, gross margin. That's the cash left after paying for materials like chips and screens. Apple's at 46.21%, crushing the industry of 31.84%, and it's climbing faster than rivals. That means keeping way more profit per sale than the average tech shop. Operating margin, the profit after running the business like paying staff, is 31.51 for Apple versus a measly of 7.22 industry-wide. Net margin, what's left after all bills and taxes, is 26.59 for Apple, leaving the industry is at 5.12 in the dust. Return on equity, or how well they use investors' money, is a jaw-dropping 182.58% compared to the industry's negative number. Apple's making a bank where others lose. Debt to equity, showing how much they borrow versus how much they own, is 188.81 for Apple. Better than industry's negative and improving faster. But here's the snag. The current ratio, which checks if they pay short-term bills, is 0.87 versus the industry's 1.19. Apple's a bit tight on liquid cash. Price to book ratio, compared market value to actual assets, is 63 for Apple against a negative industry figure, which means it valued high sky. Apple's dominating, but the liquidity reminds us it's not untouchable. Makes you think, is this stock still safe bet? Financial fundamentals. Let's talk money, the real heartbeat of Apple's business. There's 9 key numbers that shows how well the company turns sales into actual profit. So you get the full picture without jargon's overload. Starting with the gross margin, that's basically what Apple's keep after paying for raw stuff to make their phone. It's climbing up 46.21. Over 15 years, a solid upward trend, meaning they're getting better at squeezing more cash out each sale. Next, operating margin. How much profits left after running day-to-day show, like salaries, factory, steady at 31.51. EBIT margins is also stable at 31.51. That same reliable track record over the long haul. Profit margin. Profit before Uncle Sam takes a cut, a steady 31.58. Yep, another consistent performance over 15-year chart. Now, the net profit margin, the bottom line of all the expenses and taxes, it's dipping 23.97, and over 15 years that's declining performance. Finally, return on investment, ROI. Overall bang for every buck invested, stable at 65.69, consistent on a long view. Gross margins on a hot streak upward. Most other are rock steady, but net margin, ROE and ROA are sliding a bit. Watch those for pressure point. Overall, healthy as ever, but not invincible. Competitive risk. No sugarcoating. Competition fierce. Big rival with cheap, a wide line squeezing price and margin. Key market like smartphone could shrink and copycat mimics the design. Fake hurts the brand too. For Apple specifically, too tight to iPhone cash. Innovation's got a key pace and bad press for knockoff strings. Industry-wise, tech changes fast, tastes shift, competitors teams up. Europe eyeing the Apple Store and the data hard. Fines, rules could bite a bit. And China trade wars, tariffs are also messing up with the supplies. Strength. Apple's magic in-house hardware and software apps and services all tied with the killer marketing and the fan army. Loyal buyers everywhere, smart vertical control, R&D pays off. Threats. Phones and tablets getting basic. Cyber tax rising, patent fights, and dollar strength hitting sales. Let's wrap up. Apple is a strong company with powerful brand, a wide range of products, and a lot of money. Most analysts still think it's a good buy, even if it's not as cheap as before. But there are risks, competition, regulations, and relying too much on iPhone. If you like stability and long-term growth, Apple might be for you. But if you want a big dividend or worried about price swings, maybe not. If you want to stay updated on latest iPhone news, stock moves, hit subscribe. Check out our website for more simple stock explanations.